Man, it's Wednesday already. I feel like the week's gone by pretty fast. Hey, this is Crypto and Coffee with the Trading Bros. I'm your host, Clutch Crypto. B. Wellington is already on the chart. We're looking at the monthly. We went all the way out to the monthly, ladies and gentlemen. You know, there's a lot of green vectors over there. A whole lot.
If you,
Like,
yeah, if you, fo-
shit.
yeah, I mean, if you follow the principles that all vector candles get recovered, right? Like, and it's good to watch the monthly because there are things like, when we were coming up, we had this big spike right here, came back down, which would have told you that we were going to recover this candle. So if you were paying to the monthly on this way up, you could have caught it from 29.10 all the way up to 43.60, right? And then it kind of, basically went up, trapped a bunch of folks above this wick, came back down. And so, what couple things, so we're in the monthly candle or the monthly chart here. This is ETH USD. And so, we've got your EMAs here. And so these EMAs have actually crossed. This is not a, great sign for crypto on the monthly. But this is a very early candle, so let's not get too excited. But again, if you believe in the principles of these candles being uh, basically revisited from the vectors taken back, then this could be concerning for you. Uh, and so also, what you want to also realize is this wick right here, we're probably going to recover most of that wick, as well. As you can see, most of these wicks have been recovered to the downside. Most of these wicks have been recovered to the upside, except for this little peak here. And so with this crossing, we really are looking to try to hold this support in this particular area. But if we lose this support, which was caused by this volume changing candle here, then really the downside is pretty spectacular. So that's just something to pay attention to. You like to look at these longer time frames, as well. So if we then go to the daily, this is exactly what we have been talking about. We knew that we were going to get some pump to the upside based upon the fact that we've been, moving down so much. We've got the 800 here staring us in the face. We still got on the daily the 50 pointing down, the 800 flat, the 200 way up here. That's coming down as well. So
I actually like
conversely,
that. I actually like that. We consolidate and kind of in the range we're now in now, but there's a very high potential that we get a good bounce up to that 200, which also takes us up into that area of some areas that have yet to be recovered from a CME perspective.
yeah. So you will see. I mean, one of the issues that I think we're going to find is liquidity in the market, and where's that liquidity going to come from? So the narrative that's out there is a lot of the VC liquidity is left, and that has been what's been pushing up the market along with retail. So macro wise, if the economy is not doing well, if VCs are not putting out allocating the money to crypto, then any pump that we get to the upside is going to be pretty much based upon any short liquidity that's out there. And so that's something that we can see. But, as you can already see from this daily, we're still within this initial candle here from May 30th. So we're still inside. We've traded within this candle. We've traded this candle is traded within this candle as well. So we haven't broken this peak of 2019 just yet, which is kind of we've really got to break out of this candle here, get these EMAs across before we can really even start talking about a pump. Because also, when you look at it, of course, this candle hasn't finished, but we also have volume that is decreasing, not increasing, as we're starting to move up. So if we do start to get some increases in volume on this level, that would be, one of the indications that, we're kind of headed to the upside. But again, we haven't gotten there yet. This is USDT. I've got a few more lines drawn on this, but I would imagine when we start getting up into this area, which again is the area that we talked about, You've got the 200 EMA. If we do get up into this area, we may tap, this trend line here. But by this time, right, I mean, it's going to take a lot of liquidity to get into the market. And again, even if you look at it on, let's see here, let's look at it on the hourly. Again, I mean, you're not seeing a whole lot of volume that's coming into the chart. I got to figure out how to keep these all steady and nice looking. The volume's coming in, but the volume really hasn't been there. I mean, we keep stalling out. It's one of the problems is we keep stalling out on some of these moves to the upside. If you're looking for it to go to the upside, primarily you would look for this. We've got this initial spike here, which came back down, got recovered. We still have a lot of vectors down here that haven't been recovered. Once we get up into this area where this line here was the last peak that we're in, so I'll just leave that there, especially at yesterday's high as well. Again, we're at 2015. We're gonna have to see this really have some volume and break out in order to get up to this area, and then break out from this area and start getting into these additional peaks up here. But this looks like an accumulation phase here, so it wouldn't surprise me if we move to the upside. But really, 2016, that area is going to be very important once we get to it on the hourly. But you're still within this range. If you're looking at the 14-minute, we've had 200 and the 800 that have crossed here. We haven't had any really aggressive moves to the upside just yet, and we are in the Brinks box, which is generally the time in which you get a lot of volatility. We just haven't gotten it, right? We just haven't gotten it just yet, but we do have some news announcements coming out later. So the markets could be waiting on that in order to make a move. So, I would just tell you, we're still kind of stalling out in this area. We're trapping both longs and shorts. But I will tell you, just from some of the information I've looked at earlier, it does look like we're most folks are headed long in this scenario. Kraken is the only exchange that's negative at this point. This is more of a sentiment indicator, but everybody seems to be neutral to positive. From a funding rate standpoint, we look at things like open interest. Open interest is building $5.3 billion so far. And so every move that we've had to the downside, OI's kind of followed the move as well. And so what I really try to look for are changes when we move to the downside, right? Because when we move to the downside and OI increases, you're either buying the dips or people are closing out, positions as well. So, we'll see how that goes. We've got some option expiry, in a month type things. And so very important to beginning of the month to see how we're going to react to, what's happening in the open markets. We've got, Dow's up 144 points. Nasdaq's up 132 points. And so markets
They're pumping.
Are somewhat, I wouldn't call this a pump. I mean, we were up like 400 points the other day at the open, but we still got oil.
This is that relief balance that we were talking about that was going to happen for the market, and this is good because a lot of people feel like, yeah, man, we are, we're going to be good, but we know how the we know the patterns. We see the patterns. They're very obvious, and I just, based on what I'm seeing, I think we're going to have a really bad gut-wrenching recession coming in the near term, man.
Yeah, I mean, even if you look at, just going back to total market crypto, the total market cap of crypto, I mean, if you look at things like this, I mean, we're still not, where we need to be. I mean, we've kind of pumped up somewhat, but, there's just not a lot of new money that's flowing back into the market. But the stock market is going to respond. People are going to buy the dips. You're also going to have, money that comes in to try to get people to participate back into the market. So all these things are positive. I think, folks are betting on the Fed to kind of become less hawkish, more dovish as some of these figures come out. But again, the things in Russia are, Russia, the headlines are now that Russia is, winning the war. They're trying to, increase the ban, banning insurance on Russian oil cargoes. I mean, it's a very strategic uh, moves that Europe is trying to make in order to, deal with Russia, but you're still dealing with high energy prices. Unfortunately or fortunately, I mean, Russia controls a lot of the energy resources, and so as long as there's a war, we're going to continue to have, fights at the gas pumps, which is going to cause a little bit of economic slowdown as well overall. If we look at, Wednesday, June 1st, we've got, let's see, let me refresh this to make sure that, okay, 945, which we haven't yet. S&P Global Index, manufacturing PMI coming out. So this will all be around what's happening on a global level, which is very important.
What is quits?
I assume that's how many people have actually quit versus, you know, the other would be layoffs, right?
4.5 million people.
Well, I mean,
Is
that's
that
the great,
estimated? Yeah.
that's the great resignation. But also, this is from previous, the previous quits, which I don't even know what the interval for these. Like, we're crypto guys, we're not
They're
macro.
probably quarterly, don't you think?
Maybe quarterly, maybe monthly. I don't know. Maybe annually.
This is interesting.
Yeah,
I'm
but
gonna
if you
check
look at
that out
that,
later.
so I mean, look, you look at and you say, okay, well, you got to realize that from an employment standpoint, all the disruption around employers requiring vaccinations, the kind of the hangover from COVID, people are fed up, and so you've got a lot of these quits that are out there. That's kind of the great, what do they call it? The great quit. I don't know, they call it the great something, the great people leaving their jobs. I can't think of the word, but construction spending, that's going to be, kind of capex, what we're spending there. And then really tomorrow, you've got that ADP employment report. And so that's going to be very important to look at. Got some more Fed speakers coming out. But really non-farm payrolls on Friday, that's a huge unemployment rate. That's going to be huge. Average hourly earnings, that's going to be huge. So I would think Thursday, you're probably going to get a lot more volatility in preparation for news that comes out on Thursday and running into Friday. So this week is probably going to be a very volatile week moving forward. So that's all I got on my end. What do you got over there on the
Let's
hot
see,
block
man.
and,
I really haven't done too much looking at this morning, so this is fun. We're going to discover together. Let's see. Can you see high block?
I can see high block.
Okay, cool. So we are back right up here in the 1962 area. So really, believe it or not, all the moves that happened yesterday, we're still kind of right around the same area that we've been in, which I think is kind of ironic. But that does happen. So we're at a positive delta of only 2.8 billion from 4.2 billion yesterday, but however we have the same price. That's kind of weird, right? So but we're still very heavy on the long liquidation side, so I would expect that we have some type of a pullback here in the near future. We do have a big a big short liquidity to go grab at 2006. So do pay attention. We're not too far away from that right now. We did have some momentum on the opening bell, so I'm not going to be surprised if we inch our way up there. And then from there, will we get the reversal, or will we continue the upside? I'm calling a short today once we get up into this range for a price drop. However, this is not financial advice, so do trade at your own risk. And this is our favorite indicator that we have here, which is Bookmap, and this is the ETH USD from Binance. And as you can see, we are in this range right now from 1971 down to about 1938. And we worked our way back into the middle of it. There's a good possibility that we do get to the bottom side of this. Now what happens when we get there is going to kind of really determine on what they want to do. But I would expect, since we do have that long liquidation, to go up there and grab that. We slide down here where there's a heavy volume order, low node right here. So probably get a good bounce right here, right around 1945 area. And then again, we're looking up here. There's some long-term liquidity right here to 2000 that we were talking about, where the long-term liquidation was. And if we zoom out on a larger scale, you're going to see that we don't really have just a heck of a whole lot up here as far as long-term liquidity. But on the downside, oh, this is interesting. This is very interesting. They just pulled this long-term liquidity out down here. That's interesting. I'm still calling the short today, but let's see what happens. Do pay attention to what happens when we get around the 2,000 range, if we bounce down or if we bounce up. So that's about all I got right now.
Yeah, no, I would agree with you. I think we're, just based on everything that I'm seeing, I think we're headed to the downside. I mean, the only flip side that you could go to the upside is one, them trying to bait in more longs, to commit, but there's not a whole lot of, I mean, there's short liquidity up there, but it's not huge amount, not like we've seen in the past.
Right.
And so it just seems like people are waiting on this to play out, right? So you got a lot of people that are long. You don't have shorts piling on like, at these levels just yet. And so, if there's no upward liquidity for them to take, or not a massive amount, right? This could just be another setup for longs, even on a markup phase to get more longs, because OI is at 4.3 billion. Maybe it gets up a little bit further, but it's just, it just looks like a very difficult market. It just looks like a very dry liquidity that's out there, which, isn't good for the market at all as far as moving up. So could range out, but then again, like I said, we've got a bunch of news that's coming out today, tomorrow, the rest of this week. So we may just range in this area to wait for those numbers to come out and see what happens.
That's a very good possibility. We've seen it time and time again. So let's see what happens, and we'll see you guys tomorrow, same time, same place.